Hello everyone, and welcome back to this weekly update. Monday 13th of June 2022. We'll start here on gold. So last week we identified that it was staying in this range and it came down to the bottom area, and then on the last day, so Friday the 10th, last day in the week, for trading, we had this wick down and a big drive up to the top of the range, and now you can see today it's opened up higher and pushed straight back down. So will we get a drive back down to the bottom of the range, or will we reject and drive up through? So currently for gold, it's in a pullback, high low here compared to these previous lows, so it's still overall bullish. However, with this current pullback, if it doesn't continue and make a higher high here at some point, then it will be bearish. And currently, yes, when you look at it from a weekly perspective, you can see high, previous high, higher lows. And last week, based on that last Friday and the trading week, it closed quite bullish. So what I'm currently watching for to see if the bullish momentum will continue is a break above this range and close, driving up through 1890 and 1906 levels at first. If we break those, then I'll be looking for continuations up to this previous high and above. However, one step at a time. We've had this most recent bullish, very bullish candle from the bottom to the top of the range within one single trading day. And if we look here at what that looks like on an intraday chart, look at that. That's a big move. 12 midnight, we drove up and we're there at 8 AM in the morning. So 8 hours. Pretty good. And you know, that's a pretty significant move. 2.5% almost. So that's what I'm currently watching now. Will we get a continuation break up through these levels I'm watching here, or will we break back down and continue with this most recent bullish movement overall? Now silver, much the same, except we didn't get that big drive on Friday. We got this here. However, consider gold, we closed way up at the top of the range. Silver not so much. So that's a non-confirmation. So that's another reason to think that maybe gold will continue bearish as well. Because often when there's a non-confirmation between silver and gold, one of them's telling the truth and the other isn't. And you look at price action, and currently, most recently in the last weeks, we've been forming lower highs and lower lows. Oil, and this drive up last week, 0.786 region, and you can see now we're pulling down. I suspect we'll get a drive higher back to previous highs. It doesn't make much sense that it will drive lower from here. I think it's just a brief pullback before we go higher. UK oil, much the same, brief pullback before the continuation higher. However, if it was going to turn bearish, I'd want to see a drive below these levels here, 119, and below this most recent low on 2nd of June, below about 113. At that point then I'm looking for continue to the bearish side step by step. So you watch the next low, the next one, etc. That's what I mean when you say one step at a time. One level after the other. It's like a step by step. The dollar, how the dollar has had this big drive higher. We had this pullback here, made a lower low than that. However, if you look, still very much bullish. So this is a big drive higher in the last week, and we're coming up to this 105 high, and will we break through it? If we break through it, there's not really many levels remaining. We have a lot of clear room all the way up until 120. Wouldn't surprise me if we reach it this year. 120 DXY. Now yields, look at this. Last week we saw this movement, and then we got a big drive higher last week. 1, 2, 3, 4, 5. Friday a big move, 3% up to 3.158, so almost a 16 basis point move. And then you can see today we've opened, gapped higher, we've driven straight through this previous high, 9th of May. So next level I'm watching is 3.31 and then 3.4% in the 10-year yield. If we go now to basically the inverse of the yield, so this is the long bond. You can see bonds have been selling off, so inverse to that, yields have been going up, and this is very interesting what's happening in this last week. That's why I wanted to do another update, because we're having these big momentum is starting to kick in again, and we'll move on quickly later and check out the stock market, but the bond market, the big dog, has made some big moves, something to watch. So you can see the long bond, we had a pullback here, now we've driven down, currently below this low, and you can see the body actually is, if we were to close right now, it would be lower, and it would have closed. So this is the first level I was watching, basically, 137.30, and then previous low 134.20. I'm looking for a continuation, and my target is 130.01 before we get a possible reversal in bonds for a significant move higher as people flee and look for safety. Then the yield will drop because people are buying bonds. Now if we look at the bond ETF, you can see that this is pretty much the same as the long bond, and 130 I'm looking here, so, and it could go lower, so on TLT I'd say 105 to even 100, and then look possibly to start buying some bonds. Anyway, next, this is very interesting now, very interesting. I've been bearish pretty much since the turn of the year. This is unsustainable. The amount of debt in the world and credit has reached a point where it has a lag in the economy. So 2 years ago central banks did massive stimulus throughout their countries' economies, and now 2 years later we have massive inflation. So it has a flow-on effect. So now you got interest rates really high, putting people under pressure. You got shortages in supply, in shipping routes, and all this sort of thing. And this war, Russia-Ukraine, apparently they've put a blockade on blocking their grain exports in the Ukraine, and they're one of the top 5 exporters in the world. So we'll probably see famines across Asia and Africa at some point, and the greater world. So I think we're coming to a turning point here, and it's not going to be easy, but you need to, as we've discussed, need to be measured and poised. If you have money, I would suggest positioning it accordingly, and the times have cash, have assets that aren't going to fluctuate, especially massively to the downside, because if we look here now on the S&P, see the high, lower low, lower high, lower low, a pullback, rejecting 0.5 Fibonacci retracement, and the last week we had a big movement down, and today this is the first trading day. New York hasn't opened yet, but we've gapped lower straight away. If we break below this low, and as I said in the previous update, this is wave 3 of 3, so the most powerful and strongest wave in wave analysis. So, you know, if you go to the daily chart, this is a good way to see and explain it better. So you can see from the low here to the time it sort of moved down, it was 19 days. Right, 19 days. So it sort of got up to this area and it didn't change much in price. From this day here, 27th, to about the 8th of June. So about 2 weeks almost. Well, yeah, over 2 weeks. So you can see it took that long to do that, 19 days. And then in 1, 2, not even open yet, the New York session, 2.5 days. Look at that, we're already there. So it took 2.5 days to get there and 19 days to get there. Now that shows exactly what I mean. When wave 3 of 3 kicks in, it can move very significantly and fast. So first level I'm watching is 3,500, 318, 180, 0.618, and then as low as the previous March 2020, and if it breaks below that, wow, possible previous highs back in 07 and 2000, and that's a really big move if you measure from the top. 67%, 68 almost. And to be honest, the market needs that sort of correction, or realignment should we say, because it's not just a correction, it's a bear market. If we look at the move from where we are now, it's another 40%. So if you heavily invest in the stock market, you've got to understand and realise and ask yourself, can you afford 40% more losses in your investment portfolio? If you can't, sell now, sell 50%, keep the 50% invested. You know, you can do all those sorts of things, sell a certain percentage at least. Main thing is that you can cover your expenses and that you have secure income coming in. If you can ride it out, your current income to cover your expenses and style of living, then you'll be fine. But if you're near retirement age and you're heavily invested in the stock market, and remember, property tends to follow the stock market because the stock market is the biggest. You know, the S&P and the US market is about 30 odd trillion, so it's massive. And if you look back at previous years, 07, 08, 2000s, property tends to correct and follows the stock market. So, you know, this wave 3 is kicking in now by the look of it. Once we break this previous low, we're clear sailing. So, you know, all the best, and you know, you also need to understand that you look at the gain, and we've gone over this from March 2020 to the turn of the year. We're up almost 120% in the stock market. That is massive gains for an index that tends to average 7 to 10% since its inception. You know, 50, 60 years, and we're up 120% in an index in 2 years. Like, it's not sustainable. So, you know, if you didn't take profits up in here and you're expecting more, like, that's just greedy. You need to be taking profits, converting it to cash, and just holding and waiting for lower levels to rebuy until you build wealth and basically compound. And you can see volatility, it's up 17% on the day already. So, you look back here in March 2020, we had this massive spike to the upside. Like big spike, and we've never gone as high since. If you look back in 08, the spike was even higher. So, it wouldn't surprise me if the amount of gain and debt and credit and just ridiculousness that has been created in this market by easy monetary policy by the central banks, continuously low interest rates for 14 years, like it's not sustainable. And that's the problem. The longer you prolong it, it'll come to a tipping point where the central banks can't control it anymore, and it will correct back to fair value, and the cycle will repeat. It's a market is now through central banks is so engineered. It's not like a free market that's moving efficiently. It's basically engineered what they do by buying bonds from the treasury, and then in return they get money basically. So what happens is people who are invested become really, really wealthy, and people who aren't invested, and the lower runs of society, fall further and further behind. So it's basically just propping up the markets continuously, and it's not sustainable. So yeah, be positioned correctly, guys. It's only June, and this is a bear market currently. Lower lows, lower highs. Could be another year before we find a bottom, or less. We go one step at a time anyway. I'll keep providing updates, but just understand how much you can tolerate and stomach in losses. And look, depending on your age and time horizon, if you are young and you can ride it out, or you're old, like you have to just wait up for your own financial and situation and circumstance. So, and quickly, I'll just touch on crypto here. This is like, I've been waiting for this. I sold all my portfolio up here at 80 cents, 77 cents back in February. It was very bold, but I've been waiting and learning and watching. All these things are just coming into just a line, and you have to take action to make the most of it at times. And I've saved myself now 60% in losses because I sold everything there. I bought a bit back, bought a bit more. I've sold and taken a bit of profit up here, sold a bit more, expecting a lower move, and now like this is really, really good. 86%. Oh, excuse all these. This is buys and sells. So this is Bitcoin. Like, look at this. This is great to see if you're been watching it and expecting it and positioned accordingly. These are the times to buy. Okay, if you have cash, you want to be buying low and just be patient. If you did it last time when Bitcoin, when there was blood in the streets, look at that. 1150%, and that's not even 2 years. What did the stock market do? 115% in 2 years. This is almost 1200%. Like, if you can be invested in the stock market, certain allocation, and then you can be invested in crypto, say 10%, 5%, if you don't like it, even 1% of your portfolio. Like, that's a massive gain, massive. And buying at these levels here, say Bitcoin goes back to previous say 20,000, and back to the high, 250%. Sorry about that. Anyway, I hope you enjoyed that. These are some big moves here. These are the times to be buying and get your cash ready. Anyway, take care. See you.